The latest movement in Iraq's foreign exchange market has attracted significant attention as the US dollar opened Saturday's trading on a weaker note, reflecting another shift in the ongoing balance between the official exchange system and the country's parallel market. According to market observations, the dollar hovered around 154,000 Iraqi dinars per 100 US dollars, signaling a noticeable decline compared to the previous trading session. While the change may appear modest at first glance, it carries broader implications for traders, businesses, importers, and ordinary Iraqi citizens who closely monitor currency movements every day. Trading activity in Baghdad's major currency exchanges showed that the US dollar was exchanged at 153,750 Iraqi dinars per 100 US dollars during the opening session. This represented a decrease from the previous session, when the exchange rate stood at 154,500 dinars per $100. The difference of 750 dinars per $100 may seem relatively small, but within Iraq's currency market, even such movements are carefully analyzed because they often provide insight into changing market sentiment, supply conditions, and expectations for future trading sessions. Currency dealers across Baghdad responded to the opening rates by adjusting their own buying and selling prices. Exchange shops in the Iraqi capital offered the dollar for sale at 154,250 dinars per $100, while purchasing dollars from customers at 153,250 dinars. The spread between buying and selling prices reflects the normal operating margin maintained by exchange businesses, while also accounting for market volatility and the uncertainty that often accompanies daily fluctuations. In foreign exchange demand, meanwhile, the market in Erbil demonstrated slightly different pricing dynamics. Currency exchange shops there sold the US dollar at 153,900 dinars per $100, while buying it at 153,850 dinars. Although these figures differ somewhat from Baghdad's rates, regional variations are common in Iraq's currency market due to differences in commercial activity, local demand, transportation costs, and liquidity conditions. The decline observed at Saturday's opening naturally raises questions about the forces driving the movement. Currency markets are influenced by multiple factors simultaneously, and no single event usually explains a price adjustment. Instead, traders evaluate the balance between supply and demand, expectations regarding future government policies, central bank operations, commercial imports, and broader economic conditions both inside Iraq and internationally. One of the most significant influences remains the availability of US dollars supplied through Iraq's banking system. Whenever the flow of dollars into the market improves, pressure on exchange rates generally eases. Increased availability means that businesses importing goods can obtain foreign currency more easily, reducing their reliance on informal markets. As supply becomes more stable, speculative buying often decreases, contributing to lower exchange rates in the parallel market. Demand also plays an equally important role. Iraqi businesses require US dollars to pay international suppliers, purchase equipment, and finance imports, ranging from food products to construction materials and consumer electronics. If demand temporarily weakens while supply remains stable or improves, downward pressure on the dollar can naturally emerge. Many market participants closely watch the policies of the Central Bank of Iraq, because its actions frequently influence overall market confidence. Through various monetary operations, the central bank seeks to stabilize exchange rates, maintain confidence in the national currency, and ensure adequate access to foreign exchange for legitimate commercial transactions. While daily market movements occur independently, participants often interpret lower exchange rates as a sign that supply conditions may have improved or that market confidence has strengthened. Another important aspect involves expectations. Currency markets are forward-looking by nature. Traders do not simply react to current prices, they constantly anticipate what may happen next. If dealers believe that additional dollar liquidity will enter the market in the coming days, they may become less willing to hold large dollar inventories, increasing selling activity and contributing to lower market prices. International developments also remain part of the broader picture, although Iraq's domestic market has its own unique characteristics. Global financial conditions influence investor sentiment worldwide. Changes in U.S. monetary policy, movements in oil prices, regional geopolitical developments, and international trade all indirectly shape expectations within Iraq's financial markets. Oil continues to occupy a central position in Iraq's economy, As one of the world's largest oil exporters, Iraq generates most of its government revenue through crude oil sales denominated in US dollars. Stable oil revenues support foreign currency reserves, helping authorities manage exchange market stability. When oil exports remain strong and government revenues stay healthy, confidence in the country's financial position generally improves. For ordinary Iraqi citizens, movements in the exchange rate extend beyond financial headlines. Many imported products available in local markets are priced according to prevailing dollar rates. Even relatively small shifts can eventually influence wholesale costs and retail prices if sustained over time. Although a single day's decline is unlikely to produce immediate changes at neighborhood stores, consistent downward trends could eventually ease inflationary pressures on imported goods. Importers, likewise, monitor every fluctuation carefully. Businesses planning shipments often calculate their expected currency costs weeks or even months in advance. Lower exchange rates reduce the dinar cost of purchasing dollars, potentially improving profit margins or allowing businesses to maintain competitive pricing for consumers. Financial analysts generally advise against drawing broad conclusions from one trading session alone. Currency markets often experience short-term volatility driven by temporary factors such as seasonal demand, payment schedules, banking operations, or shifts in trader sentiment. A clearer trend usually emerges only after observing several consecutive trading sessions. Saturday's opening nevertheless provides useful insight into current market conditions. The movement from 154,500 dinars per $100 to 153,750 suggests that selling pressure outweighed buying demand during the opening period. Whether this reflects improving liquidity, reduced demand, or a combination of several factors will become clearer as additional trading sessions unfold. Exchange shops themselves play an essential role in maintaining liquidity throughout Iraq. These businesses serve individuals, travelers, importers, and small enterprises requiring quick access to foreign currency. Their posted buying and selling prices often reflect both official market conditions and real-time customer demand. Differences between exchange shops can occur depending on available inventory and local trading activity. Regional variations between Baghdad and Erbil also deserve attention, although the overall direction of movement remains similar. Local market conditions naturally produce slight pricing differences. Commercial activity, transportation networks, banking relationships, and regional demand all contribute to these variations without necessarily indicating fundamentally different economic conditions. Another consideration involves market psychology. Confidence often becomes self-reinforcing. When traders observe declining exchange rates accompanied by stable trading conditions, speculative buying may decrease because expectations shift toward continued stability. Conversely, during periods of uncertainty, speculation can amplify short-term price movements even without major underlying economic changes. The Iraqi dinar itself remains at the center of national economic discussions. Exchange rate stability supports business planning, encourages investment, and contributes to overall financial confidence. While fluctuations are a normal feature of every currency market, authorities generally seek to minimize excessive volatility that could disrupt commercial activity or undermine consumer confidence. As trading continues throughout the day, market participants will closely monitor whether the opening decline is sustained, reversed, or strengthened. Currency markets often experience adjustments between opening and closing sessions as new information becomes available and trading volumes increase. Dealers continuously reassess their positions based on customer demand, banking activity, and evolving market conditions. But for now, Saturday's opening presents a picture of modest dollar weakness within Iraq's parallel market. Baghdad's principal exchanges recorded trading at 153,750 dinars per $100, below the previous session's 154,500 dinars. Exchange shops adjusted their prices accordingly, with selling rates reaching 154,250 dinars and buying rates at 153,250 in Erbil. Selling prices stood at 153,900 dinars, while buying prices were recorded at 153,850 dinars, illustrating the slightly different pricing environment across regional markets. As investors, businesses, and consumers continue following developments, attention will remain focused on whether this decline represents the beginning of a broader trend or simply another routine adjustment within Iraq's active foreign exchange market. The coming trading sessions will provide additional evidence regarding supply conditions, market confidence, and the ongoing balance between the Iraqi dinar and the US dollar.